Nearly 12 million self-employed people need to fill out a self-assessment tax return each year. The non-profit organisation Tax Policy Associates has found that between 2018 and 2020, almost 400,000 self-employed people received a penalty for not filing a tax return on time. The vast majority of those had no tax to pay anyway, because they earn less than the tax-free personal allowance, which was £12,500 in 2019 to stroke 20, or £11,850 in 2018-19. Tax Policy Associates research found that the lower people's income, the more likely they are to be penalised. So how does the self-assessment system work? Most people in the UK aren't required to submit a tax return, where your only income is employment income and maybe a modest amount of bank interest. Then in most cases, a tax return isn't required. For this reason, out of the 32 million individual taxpayers in the UK, around a third, or 12 million people, are required to submit a self-assessment income tax return. Tax returns must be filed online by the 31st of January or 3 months earlier, 31st of October, if you're submitting a paper form. If you're required to submit a tax return but miss the deadline, even by just 1 day, then a £100 automatic late filing penalty is applied. After 3 months past the deadline, the penalty can start increasing by £10 each day. After 6 months, a flat £300 additional penalty can be applied, and after 12 months, another £300. By that point, total penalties can be £1,600. Until 2011, a late filing penalty would be cancelled if it was found that you had no tax to pay once your tax return was filed. That is no longer the case, and the penalty will remain even if it turns out you have no taxable income and therefore no tax liability. If you receive a late payment penalty and have a reasonable excuse for not paying, you can make an administrative appeal to HMRC, either using a form or the online service. If HMRC agree, then the penalty will be cancelled. If HMRC don't agree, then a judicial appeal can be made to the first tier tribunal. But this is very rare for late filing penalties. Tax Policy Associates believe the law and HMRC practice should change to make it fairer for self-employed people with low earnings. They say that HMRC has sophisticated computerized systems which have not been distinguishing between people who have tax to pay and haven't filed a return and people who have no tax to pay and haven't filed a return. They're advocating for penalties to be cancelled as they used to be if you're late filing your tax return and have no tax to pay. Thanks for watching. I hope you've enjoyed this video and it's been useful for you. If it has, please press the like button now and of course subscribe. I have other videos on all types of topics, especially state pensions, so subscribe to get quick access to those. And of course you can check out the description below for links. My name's Justin King. I'm a chartered and certified financial planner. My aim is to help you live a successful life. That often involves understanding your money. I host a podcast called the Retirement Cafe Podcast. You might like to tune into that. Check out again the description below for a link. And of course you can sign up for my weekly newsletter, which was packed with inspiration and tips for a successful retirement. For now, I'm Justin King, helping you live your best life.